Hi there, it's Mark Sebastian, founder of OptionPit.com, and this is the AM Volatility Report reminder. This is not investment advice. This is for education. Options have risk. Consult your financial professional. Make sure they're not suitable for everybody. And here we go. Great event last night. We had a great turnout for our directional trading webinar. It was, I think, I really enjoyed giving it. I think people enjoyed receiving it, if you will. And that's really all you can ask for in a presentation, is that you do your job well and people feel like you did, and there you have it. So North Korea fired a missile yesterday, and the SPX is up. The VIX is down, and markets are rallying. And that just goes to show you, I think the now that they've passed more sanctions, things have gotten rough, Trump has stopped saying, we're going to blow you guys up. I think that's why you're starting to see I think that's why you're starting to see these not matter as much, because it seems like we're not going to be so there's definitely still some embedded risk in the market, but they're just not interpreting it the same way they were earlier, like war was imminent. A certain amount of level-headedness is actually being assumed by the market, which is why we can rally. Some things we're watching today: Apple continues to move, and after being down for a couple days, it's up today. Vol's up. I'm going to be looking to see if I want to jump in and whether the stock can run higher. I'm obviously still watching Equifax, which is down again, and looking ugly. And I've got a few of these puts that I need to sell. Equifax has been the gift that keeps on giving. I think on that trade alone here at Option Pit, some people have paid for several years of our service. I am also still watching Symantec. This is one that owns LifeLock. I like it as a potential counterplay. It's been soft the last couple days, probably starting to look like an interesting time to jump in. Now you're going to notice that SPY is down, but it's not actually down. It went ex-dividend last night. So it's actually up. You can see the SPX is actually up. And that's going to be a better way to tell what the actual market is doing, not looking at SPY. And actually, all of the ETFs went ex-dividend yesterday, so that is why a lot of them look down, even though maybe they're up. Looking onto VIX itself, like I said, VIX is down. I would comment, though, with the VIX at 1030 and the SEP future at 11.25, there is a lot of downside. I think the September future is going to trade below 11 or around 11 by the end of the day, if VIX stays around here. I'm expecting it to fall to about a 60 to 70 basis point premium to the cash index. And that's it. And then kind of be on top of it Monday and Tuesday. Now that North Korea fired a missile, there's really not a lot of good reasons for volatility to be held up. So I think that you're going to see some real pressure on the September future and maybe even the October. So with that, what does that mean? Well, VIX itself, September VIX itself, is going to be the better way to play the September future. I like some expiration plays that are kind of interesting. I think the 11.5 put. The 11.5, 10.5 put spread for 50 cents is kind of expensive. And then you also have VXX and UVXY. I did not put in the trade from yesterday. I forgot to put that into the strategy letter. But we definitely are looking at some trades in UVXY and in VXX that we might like. So be on the lookout. So be on the lookout because, again, if there is some pressure on VIX, it could be ugly. Finally, I'm going to spend a little time on SPX. It's been pretty stable all week after getting its pop. So we may look at some Monday, Wednesday calendars, a few other things like that. Should be fun. All right, folks, if you have questions, you can email me marketoptionpit.com or you can call me 888-TRADE-01.